program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us again here at AusBiz as we get the week underway. Let's first take a look at what we saw on Friday. It was a mostly negative end to the week. On Wall Street, the Nasdaq ended 3% lower across the week, its biggest weekly loss since the tariff meltdown in early April, with investors concerned about the sustainability of rally in AI shares. The S&P 500 and Dow turned higher late in the day on reports of a possible breakthrough in Congress to end the US government shutdown. For the week, the S&P fell 1.6%, the Dow lost 1.2%. Stocks, specifically Tesla shares, fell after the company's shareholders approved the largest corporate pay package in history for chief executive Elon Musk. Shares of vacation rental firm Airbnb rose, with the company forecasting fourth quarter revenue above estimates, while it posted higher third quarter earnings. Shares of Expedia surged after the travel platform reported solid bookings from its business-to-business segment. Block shares slumped after missing third quarter profit expectations, and Take-Two fell following the company's decision to delay the launch of its popular video game. US drug maker Pfizer also rising, and along with Metsera, I should say, it's after a fierce biotech bidding war for the US-based pharma giant, which Pfizer is buying. Fast food company Wendy's rose as it topped third quarter profit estimates helped by cost savings through its turnaround plan, despite pricier commodities. And this week, earnings are due from Walt Disney and tech giant Cisco ahead of the quarterly report following the following week, from AI leader Nvidia. Well, Democrats and Republicans remain locked in a standoff that has led to the longest US government shutdown in history. Around 1.4 million federal employees are working without pay or unpaid leave, while US flights have been severely impacted in the run-up to Thanksgiving holiday due to air traffic control staffing shortages. And the lack of official government data caused by the shutdown has seen investors forced to rely on other indicators to gauge the health of the economy. The Labor Department did not release the closely watched October jobs report, which was scheduled for Friday. Meanwhile, the University of Michigan's survey of consumers showed consumer sentiment slumped to a near 3.5-year low this month, as households worry about the economic fallout from the shutdown. Year ahead, inflation expectations inched up to 4.7%. And US Treasury yields declined slightly on Friday after new surveys indicated deteriorating consumer sentiment, partly due to that shutdown. While the US 2-year fell to 3.53%, the 10-year was close to 4.1%. And the US dollar index was down slightly on the day. The Aussie is trading at 65 US cents. Well, crude prices have recovered marginally on the prospect that Hungary would use Russia's crude oil, as President Trump met Hungary's Prime Minister Viktor Orban at the White House. Crude futures at $63 a barrel. Copper fell marginally. Iron ore slumped 3% to $101 a tonne. And gold rose as uncertainty around the US government shutdown added to that safe haven demand. Spot gold around 0.5% higher at around $4,000. And Bitcoin has risen above 104,000. Let's get across what we're seeing on global markets with a focus on New Zealand. Matthew Goodson is Managing Director at Salt Funds Management. He joins us now. Matthew, welcome back. Good to catch up with you. Can we just start with your perspective on global markets, I guess particularly what you've seen on Wall Street, clearly with those concerns of the AI trade, but now also that US government shutdown really starting to weigh on sentiment.
Exactly. I think if you look at the US market, quite a number of sectors of the S&P are actually down this year, and that's been very much masked by the strength in the AI and wider IT sector. So that itself is not directly linked to the shutdown or to the tariff policies, but any cracks there, I think, would not bode well for where the US market goes from here.
All right. So as we begin the week, how have you started there in New Zealand?
Relatively quiet Monday, as always, while the rest of the world comes in. Probably the big news in New Zealand today is a $190 million equity raising by Vital Healthcare Property Trust to internalise their management contract. And quite interesting, it's the second major raising by New Zealand LPTs in the last few weeks, with Precinct doing a $300 million raise recently. And I think really reflects them taking advantage of the strength in the sector over the last few months.
In fact, Matthew, I see you're saying that you're seeing an outperformance at the moment by those New Zealand cyclicals.
Yes, more broadly, we've seen some very sharp RBNZ rate cuts down to our last move being a 50 bip move to 2.5%, contrasting with Australia, which appears put at 3.6% at the moment. So both cyclicals whose future earnings will benefit from that have performed very strongly, the likes of Freightways, Turners, etc. And also we've seen the property trust start to perform very well for the first time in a while, as their yields are now well above that offered by term deposit rates in the country.
So overall, Matthew, I mean, given where those rates have fallen to, obviously the economy was struggling, hence the rate cuts. What's the outlook for 2026?
It feels almost unusual being bullish, given the last several years in New Zealand, but it's actually very good. We have continued terms of trade strength, albeit milk prices have just steadied a little bit thanks to weak global grain prices, leading to plenty of cows in the Northern Hemisphere. But the overall outlook for our terms of trade is really good. The rate cuts are now finally starting to feed through with a long lag, and there could even be one or two more to come. And finally, it's an election year next year, and while our fiscal position isn't pristine, one suspects fiscal policy will be somewhat easier. So add that up and we could have a reasonably strong growth rebound next year, and that's what our share market's starting to price.
And Matthew, how is consumer sentiment there then, in the wake of further rate cuts, clearly, but also obviously that's impacted the property sector. So overall, how are Kiwis feeling at the moment?
It's still decidedly mixed. In the cities, it's hard yards, but a number of company comments have seen in provincial centres, they've started to see quite a pickup in business. Yet to see a sharp turn in the housing market, whereas contrasting Australia, which has just gone on from strength to strength, ours has pulled back a good 15% off the highs. That downturn appears to have stopped. We're starting to see sales numbers just pick up, so we could be in for a pretty strong autumn for the housing market, at least in sales terms, if not price terms, I would have thought.
Matthew, great to get across what you're seeing there in New Zealand. Thanks for joining us from Salt Funds Management.
Yeah, pleasure. Thanks very much.
All right, so let's turn our attention to the beginning of trade here on this Monday, looking for a positive start. SPI futures are up 0.25%. Bearing in mind, though, just some negativity there on Wall Street, particularly in terms of futures, with investors now very much concentrating on the prospects of a shutdown or not, because talks between Democrats and Republicans have stalled again in Congress. So we shall see how that plays out, whether there's any further breakthrough as the US is now into its longest ever US government shutdown. All right, stay with us for the Open. That is just a couple of minutes away.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.